Well, that was a whole bunch of nothing. For those of you who paid attention to the world's largest casino, aka the old stock market today, you're gonna know that we kind of went absolutely nowhere. We went up, we went down, we got whipsawed. All I wanted to do was puke, and it's unfortunate because we were this close to a major bullish breakout and continuation. But with respect to some of our favorite tickers, some of our favorite equities, some of them really had nice gains, while others of them really kind of gave some back. So in this video, I'll be breaking it all down of why that all happened today, but most importantly, I want to cover what to pay attention to not only tomorrow, but for the remainder of the week, because we have some exciting times ahead. Before we get to all of that, of course, if you enjoy these type of market breakdowns, don't forget to like, subscribe, turn on your notifications, all that good stuff. With that being said, let's rock. By the time the dust settled, here's what the market had to say. Dow falls, snapping a 4-day win streak as soft payrolls data drags down sentiment. With respect to the overall market, aka the S&P 500, we went nowhere. We gained 0.01%. So the hopes of this cup and handle breakout and continuation, they're still alive. We just didn't see it come to fruition today. And that was pretty much the story across the board. The SPY, we went up, we went down, we went up, we went down. The same thing with the NASDAQ. Meta had a great day, gaining 3%. Netflix, also a solid day. Broadcom, also a solid day. And then there were other tickers such as Tesla that actually had a pretty horrible day. So of course, we're going to be getting into all of that. But first, the overall market. Here's a look at the S&P 500 heat map. It's a mixed bag. We had some green areas. We have some red areas. No clear sentiment whatsoever. And we even saw that in the options market. Options market for the SPY started off strong, then weak, then strong, then weak. We also saw that in the Mag 7, strength at the beginning, then weakness, then we pumped, and in fact the Nasdaq, like we're seeing with the Mag 7 here, kind of stronger into close, once again keeping me optimistic for what we're going to see in the remainder of this week. So let's talk about why it was such a whipsaw. Well, very early this morning, we ended up getting the ADP non-farm employment change, and as you can see, it was way below expected. They anticipated 111,000, came in at 37. Not so good. And right here, treasuries rally as weak data reinforce Fed wagers. The market is starting to say, all right, man, we're starting to see some cracks in the foundation. Maybe the Fed can actually start cutting rates. And you know, one person who very much wants that to happen, this is from the president himself. ADP number out. Too late, pal, must now lower the rate. He is unbelievable. Europe has lowered 9 times. So that one report was why we had some frothiness this morning, and the market tried to shrug it off, and then in the midday, it really couldn't. Fed Beige Book economic report cites declining growth, rising prices, and slow hiring, kind of reinforcing the same sentiment that we saw this morning. Then there was a new unknown. Russia plans to respond to drone attack, Trump says after call with Putin. Trump says he spoke with Putin, predicts no immediate peace for Russia and Ukraine. So here's the TLDR. From a momentum and from an option standpoint, things looked like they were ready to rip. But then early this morning at midday, we got some news that wasn't really so enthusiastic, so we didn't get the follow through. So by the time those two netted each other out, we went absolutely nowhere. But that wasn't the story for everything. Let me rewind 1 second and talk about how Tesla got absolutely smacked. Now, if you watched the update video yesterday, you're going to know that the bromance between Musk and Trump is pretty much now over, and it all relates to the current bill that they're attempting to pass. I'm sorry, but I just can't stand it anymore. This massive, outrageous, pork-filled congressional spending bill is a disgusting abomination. Shame on those of you who voted for it. You know you did wrong. You know it. Well, everyone thought, okay, maybe he's going to calm down, and Tesla took a hit yesterday, and as you saw, it already took a hit again today. But you might be wondering why. Why did people not buy the dip? And the answer is because Elon decided to double and triple down. Earlier this morning, call your senator, call your congressman. Bankrupting America is not okay. Kill the bill. And then I have to admit, this one was pretty funny. A Kill Bill poster, maybe not helping the stock so much, but obviously I do appreciate the comedic value. I brought this up yesterday and then again in the stream this morning. By the way, shameless plug, I stream my own trading, my own account every single trading day, Monday to Friday, 9 to 11. And I asked everyone, hey, whose side are you on this? And I did a little bit of a deeper dive to get a better understanding of the numbers, and I have to say, Elon kind of has a point. Republican tax bill adds 2.4 trillion. That's trillion with a T to US deficits. This whole thing has been pitched to voters and supporters of, we're going to take care of the crazy spending that's going on in Washington, and yet what they're trying to pass is actually going to be really, really bad, and in terms the opposite way. So with that in mind, once again, I would love to hear your thoughts in a comment below. I just want to get a better understanding of where the community's at. And the other thing I should add in here, a different ticker that's kind of interesting right now is Broadcom, AVGO, continuing higher and higher and higher, putting in a nice gain of 1.6% today. And the reason I'm bringing that up is because after the market closes tomorrow, Thursday, Broadcom will be reporting. So most likely Friday going to be crazy for it. Just want to call that out. And in terms of the stock, you could just see it hit a new all-time high today. So yeah, you could do something like a Fibonacci extension, something along those lines. But in reality, if you're riding the trade, you are riding the train. And very quickly, last but definitely not least, let's talk about the overall market. Yes, we are holding this breakout. We are above the high from mid-May, and I'm basically looking for a continuation from the next technical high just above 6,000, which is a key technical level, a key psychological level, a key options level. So that is what I am looking for in the upside in the very short term. But the things that could influence that is the whole slew of interest rate decisions coming out tomorrow from the ECB. And then on Friday, we get the unemployment numbers for here in the US. So please put that on your radar. Folks, that's what I have for you today. That's your quick and dirty breakdown. I'll be catching you in the stream tomorrow, the update video tomorrow. I hope you're making a ton of money. I appreciate the good vibes. I'll see you in the next one.